Group risk benefits have gotten a lot more attention of late, and I think it probably can be ascribed to the COVID pandemic that we had, where a lot of people suddenly realized the importance of having those benefits as part of their employee benefits package. Now, I'm joined today by Angela Mhlanga, who's the CEO of Hollard Group Risk, to talk us through the importance of why group risk benefits are such an important part of the package. Angela, good morning.
Good morning, Chris. Lovely being here. I think first and foremost, insurance is an important part of any person's financial well-being. Let's start there. And in South Africa, as you know, we are definitely underinsured. And group risk provides a cost-efficient way and tremendous access for people to be insured. So fundamentally for me, it's really about ensuring everybody has some level of insurance just for their financial well-being. And through group risk, it actually offers employees a cost-effective way for access. It is also quite an important proposition for employers in that bad things happen to good people. And so as a result, employers have a good way of securing the well-being of their staff and enabling them to have literally a better future for themselves. We saw during COVID how many people died, and many of them had only the group risk benefit. And so we were actually, as a country, able to substantially provide value and sustenance for many of our people, which is fantastic. So I think group risk as a proposition remains a critical part of any employer's value proposition to its employees. And yeah, I think it's brilliant. I hope that kind of gives you a sense. I'd like to add something as well here, Chris, in that the other aspect that was seen during COVID was the disability side of the group risk benefits, because yes, a lot of people were quite acquainted with the fact that there is the death side to things. But also there is the disability side when actually employees, by virtue of long COVID in some instances we've seen, but also just typical other instances, neurological, other instances where they actually can't work. This is where this insurance also comes in. So I think there's definite value proposition for employees, and it's wonderful that you can have cross-subsidization across the organization in terms of cost to provide it for everybody. So I think the access component is hugely beneficial.
That's interesting. So Angela, tell me, what are the factors that people should consider when looking at the various group risk benefits providers?
Sure, I think it's important to understand who the decision makers are in terms of buying group risk and the purpose for which group risk is bought. It's important that if you are, for example, a sizable employer, and we do see some of those where it's large schemes, there's a level where you're looking at self-insurance. And so there are different solutions that need to be provided for a client that's looking for solutions at that level. But generally what we see with our other clients is that they're looking for a cost-effective way to achieve to enable risk benefits to be available to people. But at the same time, they're looking for service and value. And service is important because it's one thing getting something on the cheap, but not being able to really be there for somebody when they're in need, just simply because there are service levels. The important other aspect is ability and willingness to pay by the insurer. And we saw that during COVID, where in some instances there was the demise of certain insurers just by virtue of their inability to pay. Right. So it's important as ticket into the game to assess the level of ability to pay and willingness to pay as well. I think, you know, the whole notion on pricing and cost is one that I'd like to double click a little bit on, because it's not just about getting things on the cheap or, you know, arguing the rate. It's really also about creating sustainable pricing on your portfolio, because regardless of what you get charged, it needs to have some sense to the nature of the business that the insurer is underwriting. So obviously you don't want, as an insurer, to just price at a point where you're continuously just making obscene profits. But in the same way, you wouldn't want to be writing business where you're continuously making a loss. So it has to be a win-win for the client as well as the insurer. So rates have to be sensible, certainly, and understanding that there's risk at play. And I think that's where the contentious conversations happen when we engage on rates, etc. But for me, it's around sustainability of rates and being able to actually continuously offering your client, your employees, the cover they need without volatility of the rates, because you're actually just chopping and changing all over the place. So it's quite important to consider that.
100%. Yeah, the chopping and changing is the one that concerns me, especially because, group risk by its very nature is a cross subsidy between obviously young and old. It's all these, but it's also cross subsidy between years, good years and bad years. So the longer you can extend that period, the more stable the environment, the more chances are that in the good years can subsidize the bad years. And when you shorten that period, you never really play into the realm of being able to give the insurer that opportunity to smooth out costs. And if they move the business away and you do it again and again and again, in other words, you do that all over the show, let's say, for example, as a broker, you keep moving the business, then you kind of artificially, I suppose, in a way, upping the bar of costs in the industry, because as a business, an insurer has to increase their costs to keep on operating. And if that happens to everybody, then that's what I'm saying is kind of creates this artificial raise in the bar, unnecessarily, just as a result of churning that creates that sort of phenomenon. So last question as well, isn't there, is there like a one-size-fits-all group risk benefits, or are there other options? I've heard talk of cell captives, things like that. Talk to me about the different options that are available in this space.
I think, Chris, I'd like to start off that question by saying group risk, although it's fairly commoditized, requires specialist knowledge. And it's important that when players or clients actually approach the insurers, they have the context of the depth of experience in terms of providing solutions they need.
Right.
So first and foremost, and what's of absolute critical importance, is to making sure that the employees, who are the ultimate beneficiaries, have the most, the best cover for their needs. And that should be at the forefront of every engagement at any level. The second aspect to it is really about the structure of how you achieve that. And I think in most instances, people often come to us and especially the large corporates, and the ones who have an element of self-insurance as their interest, looking into the space of group risk with the mindset of self-insurance. The reality is that for any level of self-insurance, capital is also at play. So for any client who is considering that, obviously our first take is understanding their risk appreciation, the ability to take the knocks in the portfolio, the realization that capital within an insurance license is dead capital in a sense. So I think for us, it's really about, when one considers the solutions, you need to really have the depth of specialist knowledge in the insurance space to give you a good sense of what solutions there are, but also as a person, as a client looking for those solutions, really having a great appreciation of what's at play in terms of arriving at the solution. But at the heart of the decision, it's really about making sure that the beneficiaries get the most optimal outcome, looking after their needs.
100%. Maybe just as an aside, looking at social media and the impact of, say, a person's digital footprint that you've got there. You've got pictures of yourself all over Facebook, etc., etc. Now, I'm just wondering, at what point in time does insurance underwriters start taking notice of a person's digital footprint, and even as a group, as a company. Let me give an example. Let's say it's a firm of architects or lawyers that have insured benefits on a group basis with somebody like a Hollard. And then, ordinarily being an administrative or mostly office-bound, risk rating would put them in a fairly lower bracket as opposed to, say, a mining company. However, when you then look at Facebook and you look at all their senior people, they're jumping off cliffs over weekends and they're hanging off trees and doing all kinds of weird and wonderful things, but that doesn't feature in your rating base of that company.
Yes.
So I'm just wondering, at what point in time will we develop to such an extent that we start taking these little bits, these little external clues that are available out there into the equation? You don't have to necessarily answer. I'm not asking for but it's just an interesting concept,
I think these concepts, Chris, have to go in tandem with what's equitable and fair and just to the insured. And so as we evolve, taking into consideration AI and abilities to actually be intrusive in people's lives, it has to actually be measured in terms of aspects of equity and fairness. And what is right and just for that customer. So I think for me, we see it also when you're employing somebody, do you now then go peruse their whole life to try and see whether they've got the right skill set and ability to actually work within the business. And I think all those actually border on the realm of the other aspects around, it's not just about the actual getting access to it, it's really the how, the intent, and the fairness of it ultimately. So I think as an industry, that's a route that we're definitely going to have to face and embrace, but hopefully we take it forward in the right manner so that it actually achieves the intent that ultimately benefits everybody.
Fair enough. Angela, thank you very much. That was very insightful. I really look forward to engaging with you guys a lot more about this topic in the future. Thank you for your time. We'll certainly chat more.
Thanks so much, Chris. This was very good. Love your EBnet, the value you add in the industry, and I appreciate this chat so much. Thanks.
Brilliant. Thank you very much.